LP regime provides daily liquidity provider regime updates. This channel is for people who already understand liquidity provision and want a structured way to manage risk. This is not a trading signal service. It is not about predicting price direction. LP regime focuses on identifying when markets are range-bound versus trending, so liquidity providers can avoid being exposed during regime shifts. When we talk about a range, we are not referring to the highest or lowest wick on the chart. A liquidity provider range is defined by repeated acceptance and rejection zones, where price spends most of its time. This is the area where liquidity providers are typically paid through fees. Extreme wicks are ignored unless price reaccepts and begins to trade there consistently. LP low represents the lower boundary of the range, where price repeatedly finds support and closes above it. LP high represents the upper boundary of the range, where upside attempts repeatedly fail and price is rejected. Inside this range, liquidity providers are generally compensated for providing liquidity. Outside this range, risk increases sharply. LP regime uses three classifications: open, shifting, and closed. When price remains inside the range, the LP regime is open. This is typically a lower-risk environment for passive liquidity provision. When price begins to press one side of the range repeatedly, the regime is shifting. Risk is increasing, and liquidity providers should be cautious. When price breaks and accepts outside the range, the LP regime is closed. In this environment, liquidity providers are exposed to directional risk and forced rebalancing. Liquidity providers do not usually lose money because of impermanent loss alone. They lose money when markets transition from range-bound behavior into trending behavior. In trending markets, liquidity providers are forced to sell into strength or buy into weakness as price moves away from the range. Fees stop compensating for this exposure, and risk increases significantly. The daily videos on this channel show the current liquidity provider range and regime for Ether against USDC. These videos are not meant to be watched in isolation. They are updates within this framework. When the regime is open, liquidity providers may choose to participate. When the regime is closed, the framework suggests remaining inactive until price re-enters the range. LP regime is not financial advice. It does not tell you when to enter or exit positions. It does not provide predictions or targets. It provides structure, so liquidity providers can decide when not to participate. If you are an active liquidity provider, these updates are meant to help you manage risk over time. This is LP regime.